Morning, Bill here with the Metals Minute. Today is Monday, August 15th, 2022. Well, there's some rumblings going on in the bond markets worldwide. Financial analysts are suspicious that something has gone awry in Europe. We're not exactly sure what yet, so we'll keep an eye on that, but it's creating a lot of paper selling of various assets, metals included. However, the physical demand continues to be off the charts, and so we're seeing a divergence there between what's happening in the paper markets that can be controlled with a computer key and the actual physical metal demand. So we'll keep an eye on that, take advantage of it if we can, while the paper prices are artificially tamped lower. Now, there's some things going on in the American economy. The New York Fed announced this morning that the manufacturing index here in the United States, they were expecting a +5 number, and instead they got a -31 print. So this is one of the sharpest declines in history, and it's also at the lowest level since the financial crisis of 2007 and 8. So things are looking a little bit dire there. And one reason we're not manufacturing as much is partly to do with the employment situation. We have fewer people working or looking for work of every demographic education-wise, from high school to some college to bachelor's degree or higher. For some reason, we have fewer people working or looking for work. Despite the broadcast unemployment numbers, what they've found is that there are fewer full-time jobs and more part-time jobs, and a record number of people working multiple jobs. So there's some people that are overemployed and perhaps several underemployed, and some just not working at all, not even looking for work. Another reason that I believe may be partly to one of the causes of this is the rate of inflation is virtually right at double what the rate of pay increases that people have had. So even though the rate of pay for even unskilled labor is higher than it's ever been, fewer people are willing to take work because the standard of living for doing the work is lower than what the raises are. So in other words, wages have gone up a little over 5%, but the rate of inflation is over 10 when you look at what people are actually purchasing. Now let's clarify that. The rate of inflation for necessities is virtually double what the rate of inflation is for things that aren't considered necessities. So, and necessities are where those are things everyone needs. Non-necessities are things that the only time people buy those is when they can afford it. They don't really have to have it. So there's less demand for those type of things. Everyone needs necessities. And so we see that inflation bearing out in that way, and it's creating a divergence in the employment markets. And you have a lot of people, more than ever in history, are working multiple almost full-time jobs, and fewer working at all. So, or more working not at all than has been in recent history. And so these are some issues in the American economy. It's affecting manufacturing. It's affecting virtually every industry. And so we're not certain how much the COVID situation, or whether we won't even get into that can of worms, but life insurance executives are still talking about the number of excess deaths that are out there that seem to have no cause that anyone's willing to talk about. but that might be going into some of this having fewer employees as well. But no one is saying that in the headlines. But anyway, we'll keep an eye on that. And one thing to remember during these times, and it seems to be difficult times as we look at what's going on out there. When times get tough, what comes into play is a way to preserve ourselves financially. And that's where precious metals come in. And during periods of recession and inflation, those two conditions combined, which is where we are today, and it's looking more dire in the near future in that regard, that's where typically gold and silver have done the best and at preserving purchasing power. So thank you for tuning in. Keep an eye on what's happening there. We'll keep you abreast of any developments that do occur and more information about things that are happening in the markets. And have a great week. We'll see you soon.